Stocks surge on Wall Street. Indices regain some ground led by tech stocks as the Nasdaq surges over 2%. A sharp fall in Boeing shares, however, tempers the Dow Jones rally. Stocks in the Asia-Pacific trade largely higher on a strong handover from Wall Street. The GIFT Nifty is indicating a positive start for the Indian market. Crude slumps. Brent corrects nearly 4% to under $76 a barrel as price cuts by Saudi Arabia raise concerns over global demand. With 3 weeks to go for the Union government's interim budget, sources say a capex hike of 15 to 20% could be on the cards as the government looks to increasingly focus on modernization of railways, defense and upgradation of road infra. Bajaj Auto announces a mega 4,000 crore rupee buyback for 1.41% equity, priced at 10,000 rupees a share, a 43% premium to yesterday's closing price. The promoters will also be participating in the buyback. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking for you. And it looks like we have a strong handover coming in from the Wall Street. The futures, however, have come in for some profit booking. But first up, let's take a look at the Asian markets. Well, we have seen some good gains in the Asian markets as well. The Japanese market are higher. They are the biggest gainers today because the inflation data in Tokyo has come out and it is the lowest that has been seen in 18 months. So it has continuously been declining, and that is something that the street likes. The Taiwanese index is up 0.3%. We have the Hang Seng, which is up around 0.4%. And that's the case across the Asian markets. But let's take a look at the GIFT Nifty because that one will indicate the moves for our own markets. Well, that's a gap up opening that the implied open is suggesting, 113 points higher as per the implied open on GIFT Nifty at 21,693. And in the US markets, where we saw a lot of action, Wall Street ended higher on Monday. Dow Jones added over 200 points, S&P gained 1.4%, and the tech-heavy Nasdaq jumped around 2.2%, marking the best day since November. The 10-year Treasury yield lost about 3 basis points to trade around the 4% level. Tech giant Nvidia rose 6.4% to reach an all-time high, and Amazon climbed nearly 2.7% to help pull the Nasdaq higher. Alphabet shares also advanced 2.3%. Shares of Boeing tumbled 8% on Monday as the Federal Aviation Administration has ordered airlines to ground dozens of Boeing 737 MAX 9 aircraft for urgent inspections after a door plug of an Alaska Airlines flight blew out mid-air on Friday. Okay, it's time to listen into some important opinion coming in from Wharton School's Jeremy Siegel on the outlook on rate cuts in 2024 and the impact on the U.S. market.
It looks like there are 6 cuts. By the way, as a result of the rise in interest rates, there's now 5.5 cuts built in. But about 1.5 of those cuts is really what's called risk hedging. And that is, you want to buy those contracts. If something terrible happens, geopolitical risk, pandemic, financial collapse, they will go way up. So they offset the risk on other assets. So as a result, people buy them. I estimate that there's really only about 4 cuts that are built in to the Fed funds futures. And we know the dot plot said 3. So really, there isn't that much of a difference between the two right now.
Okay, all right, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. The trade setup, a lot of stocks which will be on our radar, and the action from the F&O space as well. Hey guys, a very good morning to both of you. So Darshan, let me come across to you first. Looks like there could be some reversal today.
Morning, Sonal. So we'll start with US market. It took just one day for the US market to cover all the losses of last week, and thanks to the big surge seen in tech heavyweights. And on the back of that, Nasdaq, the tech heavy index, surged over 2% with nearly 90% of its constituents closing in the green. S&P too saw a gain of more than 1%. Dow Jones, though, relatively underperformed and closed with a gain of 0.6% as one of its major constituents, Boeing, seeing a fall of over 8% on the issue related to its B737 MAX 9 aircraft. Coming to our market, for better part of the day on Monday, we were trading with minor cuts until the last hour fall came majorly in banks, which led to Nifty closing at lowest levels in last 2 weeks, but managed to hold the level of 21,500. Nifty Bank, though, closed at day's low with SBI and Axis Bank being top losers. For today, GIFT Nifty, following the big positive cues, is indicating a gap up start, and currently it's up more than 100 points. Also, despite the fall and volatility, both FIs and DIIs were buyers in the cash market on Monday. FIs bought shares of rupees 16 crore, while the buy figure for DIIs was rupees 156 crore. One more positive cues that we have for today is the big fall seen in crude. Both Brent and NYMEX saw a fall of more than 4% each, as demand concerns have resurfaced after price cut announcement by Saudi Arabia. Lastly, talking about stocks to watch that can be in the focus on the back of news announcements. First one is Bajaj Auto. It has announced a share buyback of rupees 4,000 crore at a price of rupees 10,000 per share, which is at a 43% premium to yesterday's closing price. Next is Delta Corp. It will be announcing its Q3 earnings. Metropolis might react to its Q3 updates. And lastly, oil marketing companies on the big fall in crude.
Okay, all right. So those are a couple of stocks that will be in focus, but there are others as well. Hormaz, Bajaj Auto tops the list.
Absolutely, it does, and it will be the stock to watch out for today. And as Sudarshan highlighted, it was a 4,000 crore buyback that they've approved. The buyback price of 10,000 is a 43% premium, and more importantly, the promoters intend to participate in the buyback. So we'll keep that on our radar. Tata Motors will be in focus because Jaguar Land Rover reported its sales figures for the quarter. The wholesales were up 27% in December year on year. Sequentially, they were up 4% at 1 lakh units. Retail sales in December were up 29% to 1.09 lakh units. Metropolis also came out with business updates where the core business revenue was up 12% year on year, which was aided by a 9% volume growth during the quarter. And the fastest growing segments during the quarter were premium wellness and the specialized segments. BEML has won an order from the Defence Ministry. That order is worth almost 330 crore rupees, and that is for the supply of mechanical minefield marking equipment, which is known as Mark II. Now, Bharat Forge spoke exclusively to CNBC TV18 yesterday. They said that defense as a business will grow faster and become larger than the core business. And Baba Kalyani also mentioned that he is expecting the group revenue to reach 20,000 crores in the next 2 years. Capacite Infra Projects has launched a QIP to raise funds. The floor price is a 4.1% discount. The board had approved raising 200 crore rupees via the public issue of shares in May of last year. Bandhan Bank, where sources have told CNBC TV18 that there is no forensic audit by the regulator or the RBI, but a detailed audit will be undertaken by the Credit Guarantee Fund of Micro Units, which is the CGMFU, and Bandhan Bank is yet to respond to CNBC TV18's queries. And lastly, some MOUs signed in Tamil Nadu, where Eicher Motors will be investing around 3,000 crore rupees. Brigade Enterprises will be investing 3,500 crores. And lastly, IRM Energy, which will be investing around 850 crore rupees over the next 5 years. Back to you.
Okay, all right. So there's a lot about investments by listed companies, but we'll do one thing. We'll go across to Nigel. He's joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. Yesterday, no two ways about it. It was a weak trading session. The Nifty and the Nifty Bank, both of them ended at the low point of the day. I was looking at the open interest. Just take a look at that screen. Both the Nifty Bank ended low. I was looking at the open interest. On the Nifty Bank, there were shorts that were created. On the Nifty, there appears there was some mild unwinding that did take place. And I'm going to be watching the 20 DMA for two different reasons on both these two. So on the Nifty itself, support you have it around the 20 DMA, but that's closer to 100 points away from current levels. For the Nifty Bank, you'll get more confident on the upside once the 20 DMA gets breached on the upside. So keep an eye out on both those two marks. What did the FIs do yesterday? Well, after a while, they added close to around 18,000 short contracts, which takes the short positioning from around that 30%, closer to around 38% odd. Two strikes were very active, 21,600, 21,700 call. Both of them were fairly active in trade yesterday, and that's why the PCR has come down to around 0.84. Remember, on the downside, normally when it goes to around 0.7, we see a bit of a bounce that does take place out there. Another important cue to track today will be the Nifty Financial Services Index. That plays out the weekly expiry. So we're indicating some green to kickstart trade. Let's see whether or not we can build onto those gains. Back to you.
Okay, all right. Thank you so much, guys, for joining us and telling us what to expect from trading day today. And it is expected to be a good one. We'll slip into a break now. Up next, as we near the budget, sources say the government is considering hiking capital expenditure. More on that on the other side. Welcome back, and it's about 3 weeks to go for the interim budget. Sources say the government is considering hiking capital expenditure by 15 to 20%. The government's capex is likely to focus on expanding high-speed rail corridors, railway modernization, and expansion of rail connectivity to the northeast. Timsi Jaipuria is joining us with the details. Timsi, take us through government's plan.
As all eyes are on the upcoming interim budget, sources have told CNBC TV 18 that the government is again going to bank upon capex to accelerate growth. According to highly placed sources, on the drawing board is the proposal to push at least 15 to 20% hike in capex, which could be announced in the upcoming interim budget. Remember, government had earmarked 7.5 lakh crores for capex in FY23, which was hiked for FY24 at 10 lakh crore rupees. And again, for the coming fiscal, the target is to increase this amount. Government's view is very clear. Capex will continue to drive growth and employment, majority of capex to focus on infra and strategic ministries, including roads and highways, railways and defense. Capex has the ability to crowd in private investments, will help in providing the much-needed cushion against global headwinds, is the view from the government. Not just this, sources say that the government feels that Capex has tangible multiplier impact on sectors like cement, steel, road construction equipment, etc. So what will be the focus of fund allocation? Well, again, according to sources, the capex will focus to fund expansion of 4-lane highways, greenfield access controlled corridors, high-speed rail corridors, aiding further railway modernization, including station redevelopment, Kavach implementation to help expand semi-high-speed Vande Bharat Express trains, Amrit Bharat Express, expansion of railway connectivity in Northeast. Similarly, for strategic areas, capex is likely to aim at boosting defense exports beyond the record set in FY23. Also, it is likely to lay emphasis on Nari Shakti, ensuring ex-servicemen welfare schemes, among others. It is important to note that Budget 2023 saw capex outlay rising for the third year running to 10 lakh crores, which was a 33% rise. Budget 23 capex outlay was 3 times outlay of Budget 2020, 4 times outlay of Budget 2017, and 5 times of outlay of Budget 2014. Let's see what is that the government projects on the 1st of Feb.
Okay, and on 1st Feb, all eyes tuned into CNBC TV 18 for the budget coverage. But that is about the budget countdown. The other stock that will be on our radar today is Bajaj Auto. Has announced a 4,000 crore rupee buyback. It is priced at 10,000 rupees a share. Sonia, it is a significant premium.
Absolutely. Thanks a lot for that. It's a big, massive buyback that has been announced by Bajaj Auto, and the stock will be in focus today. As you rightly said, it's a share buyback of up to 4,000 crores at 10,000 rupees a share via the tender offer route. And this is at a premium of 43% to the last closing price. Bajaj Auto will be buying back 1.4% of the equity shares of the company via the tender route. And assuming a profit increase of around 30% in FY24, the overall dividend plus buyback could be 8,400 crores. Now, this is Bajaj Auto's second share buyback in the last 2 years. Last time in July of 2022, the purchase shares were about 2,500 crores and the dividend plus buyback was 6,500 crores. Compared to that, this time it's 8,500 crores. But it's logical to assume that it would have been higher because the cash balance has also improved for the company. The cash on the books is 20,000 crores currently. The promoters will also be participating in the buyback. Currently, the promoters hold about 54.94% stake and FI shareholding is 14.7% stake. But the only question I have for the management is the rationale behind such a big premium to the current market price. Of course, we'll get more details on that. But for now, I'm expecting the stock to open in the green.
Okay, all right. Yes, that's a massive premium. Thank you so much, Sonia, for bringing us all those details. It's time to get into another break. We'll get you all the cues from the commodities market when we come back. So stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Well, there's been a sharp fall in crude prices and the other commodity cues. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Hi, morning, and thank you for that. Well, I'll start with the crude oil prices because we have seen a 4% decline overnight, and with that, the crude oil prices now are trading at around 6-month lows. Well, Saudi Arabia cutting official prices in Asia to the lowest to 27 months really tells you that, one, they're trying to fight competition on lower crude demand and also other cheaper oil available. The second point is the rise in output from OPEC and allies for the month of December actually gained up by 70,000 barrels per day. There have been reports of higher output from Angola, Iraq, Nigeria, and that has led to higher supplies. Markets already are dealing with record high production from US, so there is going to be an oversupply rather than a deficit in the first quarter of 2024. The markets also are waiting for inflation data. For US, it comes in on Thursday, and Friday you have China's trade data and inflation numbers coming in as well, and that's the next best cue that the street will wait for.
Okay, all right. So a lot of macro cues that we are waiting. Thank you, Manisha, as always, to bring us those details from the commodity markets. Let's move on now to some updates on the ongoing Israel-Hamas war. According to Hezbollah, a suspected Israeli drone strike on southern Lebanon killed its senior commander, adding to concerns that Israel's fight against Hamas in Gaza could erupt into a wider regional war. Israel has been largely blamed for the strike, although it has neither acknowledged nor denied its involvement. Meanwhile, the U.S. Secretary of State Antony Blinken is visiting leaders in the West Asia this week on a trip aimed at preventing the war from expanding along other fronts. Okay, all right. On that note, we'll take your leave on Power Breakfast now, but do stay tuned. Bazaar Morning Call comes up next with all the market action.